All right, so today's Tuesday, January 7th. I just wanted to do a trade breakdown from the trade I took today on NASDAQ. Hold on, what time frame we on right now? So let's start off with the signal. Uh, Today being Tuesday, the market was already pushing up. Not gonna lie, I kind of doubted that this trade was gonna actually go up because it was already trending up for the past couple of days. I looked at Monday's low as like a support level. So with me going for the pullbacks, a 15-minute pullback printed right here. I believe this is around 10:45. Yeah, it looked like 10:45. 10:45 candle. 10:45 candle printed at 11. So once this 15-minute pullback printed, I'm like, all right, there's a 15-minute pullback. I do go for pullbacks. But damn, what did it pull back from? And I'm looking at, okay, it pulled back off of the previous day's low. A lot of times when the market is trending up and I get a pullback at the previous day's low, sometimes that's like a reversal. Not a reversal, but it bounces off of the support level to go up. So I was looking at that pullback as not a continuation down, even though New York did sell off right here at what time was this? This was like around 9:30. 9:30 it dropped. So when it dropped, it dropped. 15-minute pullback, printed. For me, that's a signal for continuation down. So I dropped down to the smaller time frame. I was looking for an M pattern on a 1 minute. And as you can see right here, market pushed up. This is the 15-minute pullback on a 1 minute. It pushed up for 15 minutes. Boom, dropped down, created the neckline, came up. When it dropped back down, I was going to sell it right here at the neckline, but then I realized this neckline has to be broken for it to be confirmed to me, because I used to make a lot of mistakes where I would sell it, get too hype, and I would sell it. Because if you look at it on the 5 minute, this same level right here is the neckline for that M on a 1 minute. So a lot of times I would wait for a 5 minute candle to break that neckline on the 5 minute. But this is the thing, it pushed up. I don't know how I lost that. It came down, pushed up, and I was just waiting. Because as you can see, these are the trades from today. This is at 1823. 1823 is 1123. So at 1123, I waited. This was at 1112, 1113, and I'm reading the times down here in this box. So at 1113, none of these broke below this neckline, so I'm just waiting. I'm waiting. So when it pushed up, I consider this to be a box now. Now I'm like, all right, let me see what price does. I don't have no type of engulfment candles going in the direction that I want to sell in. I got this engulfment candle right here. So I immediately sold right after that candle closed, which was at 1123. As you can see right here, the time that I ended to sell was at 1123. As soon as I took the sell, price pulled back. Damn, stopped me out. Lost $33 on that. When it stopped me out, I'm like, all right. Well, instead of me waiting until price come back in, I'm just gonna try to sell it high. And that's something that I normally don't do. I normally have to wait for price to come back inside of the 20 EMA. Hence right here, this is what happened. This candle was an engulfment candle. It was going in the direction of the trend that I was going in. And it closed inside of the EMA. So when it came back here, my next trade was at 1127, which was right after this candle. I sold right here, and I'm like, all right, I'm selling high. This horizontal line is the top of the 15-minute pullback. So I'm like, all right, well, if I just sell it high, it'll give me a better chance of getting, of not getting stopped out. So I entered at 1127, which there says 1827. So I entered, my stop loss was 30 pips. I could have literally had my stop loss at like 30, 31 pips, or even that same amount. This was at 33 pips because it was a 10 cent lot and I lost $33. So that was 33 cents. If I'd have had my lot, if I'd have had my stop loss at the same amount, I probably wouldn't have lost the trade. But it's cool. I really wasn't supposed to enter that way anyway. I just figured like if I sell it high, I got a better chance of not getting stopped out. And I got stopped out. So that was my second trade. So I'm like, damn, I'm 2 Jones down. So my next one was after this one closed back inside. When this closed inside, I'm like, oh yeah, nah, I bet. Price is pushing back down inside the EMA. This is like even a M right here. My computer lagging. As you can see on the line chart, you see the M's. It's like a bunch of M's and W's, but this is like an M pattern right here. And I think it's lagging. I entered right here at 11:31, and you can see right here that was 11:31. My stop loss was like 30. I don't even remember. It was either at 30 or above 30 pips. I don't remember, but it pulled back. I know it got real close because I didn't get stopped out. Once I entered here, it pulled back. I'm like, damn. I'm looking at the top of the 15-minute pullback, and I'm thinking like, well, I'm gonna use the pullback as my resistance. I'm gonna use the top of the pullback as my resistance, so I won't get stopped out. So I started to manually close it out, but I let the trade play out, and it dropped down, started dropping. And I'm getting excited, like thinking, all right, damn, it's finally playing out because I lost twice already, but I believed in the trade because the whole thing was a 15-minute pullback. So my faith was there. So once it started coming down like this, it started pulling back even more. Not even more, but it started pulling back again, back to the same level that almost stopped me out. And look, you can see it actually went a little higher than it was. So I almost got stopped out a second time. And I thought about closing it out manually, but the only thing that stopped me out was like, why close it out manually just to take less, just because you think it's going to stop you out, to just take less instead of stopping out at 30 pips, saying, well, I'm going to stop it out at 28 pips because it's going to hit the 30 anyway. Why take it for 20? Why take it for 30 when I could just get it for 28? So I got out of my head and just said, look, if the trade going to stop me out, it got to stop me out. I'm not going to move my stop loss. I'm going to leave it alone. Price started dropping. So I'm like, damn, okay, boom. Dropped again, pulled back, created another M. So I'm looking at that. Okay, cool. It's not going up because if it was going up, the 15-minute pullback would have actually broke higher. It would have broke above it more. Even this one peaked above it, but this is on a 1 minute, on the 15-minute, I believe. Damn, it actually did close above it on the 15-minute. But that's cool. I still was looking at it like, nah, it got to show me a little more instead of me just assuming that price is going to go up. And even on a 5-minute, price was inside of the 20 EMA on here too, which is another confluence for me that we're on the downside. We're still continuing on the downside. So this 5-minute candle was at, what's this, 11? Did I say 11? 11:30? Yeah, 11:30. That was 11:30. This was an engulfment. I didn't even really consider this at the time because I entered at 11:31, and that's when it pulled back and did all that. But that was a good sign that we were going to the downside because we had a 5-minute engulfment right here. But here we go. Hold on, I'm trying to rewind this. My computer's lagging. But I managed myself through this. Once this, I almost got stopped out twice. It started breaking down. More and more and more and more. I don't remember exactly how many pips I was up at this point, but I know it started pulling back. It started going sideways. Once it started going sideways, I was moving my stop loss as well. I was managing the trade by the 15-minute candles. So I consider, okay, if I'm gonna sell off of a 15-minute pullback, I'm gonna stay in this trade as long as these 15-minute candles don't get broken above. So I had my stop here, and then once this one printed, the next one was a 15-minute pullback. So I'm like, oh, bet this is actually work. This actually is going to help me out because I normally sell these pullbacks. So instead of me getting in for a second trade, which I could have, I said I'm already down 2 trades. This is my 3rd trade. I try not to go above 3 trades in a day. So I actually just used the 15-minute pullback as a way for me to stay in. I said, all right, cool. As long as this doesn't trade above, I'm gonna treat it like as if I'm trading it. I'm gonna draw a horizontal line at the top, and I'm gonna wait for an M. If an M prints off of that, then that's gonna be, that's gonna be my signal to stay in. So this was actually the top of the 15-minute pullback. I drew this because I was using this as a head and shoulder, because this was a peak formation here. It was like the top of the box, of the consolidation box. It was high, low, and then price went higher. This is a 15-minute pullback line. Came down, went up. I actually got scared a couple times. I'm like, damn, I don't want this. Because I seen the trade, like, I was in profit about, I don't know, $80, maybe 90. And then for it to come back up, I was up like $50. And I was even considering, like, damn, I really supposed to be going for 50 pips, but because I was down 2 trades for the day, I'm like, nah, I'm gonna fully let this execute. I don't want to just close out at 50 when I'm already down 63 for the day. So I got a little scared a couple times around this area because I'm like, damn, I wanted to go up, and then I end up closing the trade out for like $20 or $30 when I was up $90. So that's the hardest part of, accepting that, or taking a win, even though it's a win, taking it for less money when you had money on the table already for more. But I managed myself. I stayed in. I seen the M print, which was a confirmation for me because the 15-minute pullback printed, and then the M printed afterwards. Also, the right leg of the M closed inside of this, broke this neckline, which was another confirmation for me, which made me stay in. So I'm like, bet. It started dropping down. My take profit was right here, but when it broke this, it pulled back again, and I started bitching. I ain't gonna lie, I started bitching. And I'm like, damn, it's about to stop me out. But that's where this came in, because I looked at this as a head and shoulder. I said, you got a peak formation here. The M is like the head. It broke above this level. But then this coming up again. I said, as long as this don't break above this level and trade higher, I'm cool. That's when it started breaking down more and more and more and more. And it hit my take profit. So I wanted to go for more as well. I was actually going to target double zeros here, which is the next which is the next major level, round number level, this red line right here. But this was the low of the day, and this is the level that price pushed up from. So I was just targeting that level, which was 120 pips. And I'm glad I got out there, because I really wanted to hold it, but I'm like, nah, the greed. I'm like, I don't need to hold that trade. I was just targeting low of the day, which is enough. Even for me going for 120, I really could have stopped it out at 100 pips. I'm gonna go over the screenshots real quick. Screenshots are literally the same stuff I just explained, and I'm gonna post that on the community post as well. Let me see something real quick. Dang, I ain't even got all that, man. This today? Yeah. Let's see how many minutes this drone going for. 14 minutes is cool. I don't want to be talking too much. Computer lagging like a mug. I'm just trying to open this file, bro. Man, the main thing with trading, man, I'm learning while this is loading and taking this damn time is patience. Really gotta have patience. There's a lot of times like where I made mistakes where I rushed the trade and I'm like, damn, I want to enter right now. I want to enter right now because I'm being impulsive and I want results, and it causes me to lose. So even with this taking this damn time, it's like I'm getting impatient, but it's all good. So these are the screenshots. Hey, John's taking forever. You know what? I ain't even gonna do it. I ain't gonna do it. Look, that was a trade for the day. January 7th. Today's Tuesday. Execution 120 pips, which was love. I took 2 losses. I was able to bounce back. My account was down. I was able to double the account. Executed. Stuck to the plan. Got the results I was looking for. And I just got to continue to trade, do the same thing. When it comes down to it, I think of it like, damn, I really can make a lot of bread off of this. And it don't matter how much, I don't want to say it don't matter how much money you have, but it's like, yo, you really can make a lot of money. It just comes down to how much money you have in your account and how much you're willing to put at risk. If I continue to trade and do the same thing, continue to take the same trades, there's no limit to how much money I can make. And there's no limit to how much money you can make. So that's I just want to drop that. That's my gems for the day. I'm gonna wrap this joint up. The screen, my computer is lagging all crazy. I just don't want to hold it up no more. So I'm gonna wrap this joint up.